Most people think the economy is about making things. Cars, houses, food, technology. But what if the biggest business today isn't producing anything at all? Imagine a company discovers it can make more money moving numbers on a screen than building products in a factory. Strange idea. Yet that's exactly what happened across much of the modern economy. This shift has a name: financialization. Decades ago, profits mostly came from selling goods and services. Today, a growing share comes from financial activities: buying assets, trading securities, issuing debt, and engineering balance sheets. The logic seems simple. Why spend years building a new factory when a stock buyback can boost earnings this quarter? Step by step, money began flowing away from production and toward finance. Corporations borrowed heavily, investors chased asset prices, banks expanded credit. Wall Street grew faster than Main Street. And for a while, everyone looked richer. Stock markets soared, real estate prices exploded, financial assets multiplied. But here's the uncomfortable math. Asset prices can rise much faster than wages. When wealth comes primarily from owning assets rather than creating value, those without assets fall further behind. Financialization doesn't necessarily create new wealth. Often, it rearranges who receives it. The result is an economy where markets can hit record highs, while many people feel financially stuck. So, if finance increasingly serves itself rather than the real economy, what exactly is the economy becoming?